Shiz just got real. Nobody has an attention span anymore. However, I implore you to take 5 full minutes to watch this entire video clip of U.S. Treasury Secretary Janet Yellen confirming that the U.S. government and regulators will pick and choose which banks get bailed out. Are they causing a bank run on purpose? Are small banks toast? You decide. Check it out.
Don't have time. I need to be able to drill in on a couple of things. Let me start with some of the banking issues we're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVB just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your plan?
We made that determination.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also fail.
It's happening because you're fully insured no matter what the amount is if you're in a big bank. You're not fully insured if you're in a community bank.
Well, you're not fully insured. And
you were at Signature, and it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks, and that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
So there's a special assessment that's been done on community banks in my state and all banks across the country. Was there any discussion that that special assessment would only apply to the larger banks, or was it always assumed the special assessment would cover every bank, including rural banks in my state?
I think I'm not certain what the rules are around that. That's for the FDIC to determine.
It has been reported publicly that SVB had a large number of Chinese investors that are there, including some that were companies directly connected to the Chinese Communist Party. Will those individuals, companies, entities, and investors that are Chinese investors be made whole based on assessments in my banks in Oklahoma? So what I'm asking is, will my banks in Oklahoma pay a special assessment to be able to make Chinese investors whole from Silicon Valley Bank?
Uninsured investors will be made whole in that bank, and I suppose that could include foreign depositors, but I don't believe there's any legal basis to discriminate among uninsured.
I get it, but I'm just saying that my community banks are going to pay this additional fee. It is always fascinating to me as well, the conversation that taxpayers are being made whole in this, that taxpayers are not going to have any kind of consequence on this. I'm sure my bankers are going to be very excited to know they no longer pay taxes, and their banks no longer pay taxes. Credit unions don't pay taxes, banks do, and so they're definitely taxpayers as well, and all banks make their revenue off of rates and fees and such to their account holders, which means every Oklahoman will pay higher fees in their community bank.
We're just going to have to move on.
If we have a collapse of the banking system and its economic consequences, that will have very severe effects on banks in Oklahoma that will also be threatened.
I'm just worried about the long-term
We are going to have to move
on our
on,
banks as well.
or we're not going to get all senators in. Senator Cortez Masto.
Yes, in a mere 5 minutes, the U.S. Treasury Secretary conceded that the Fed is destroying the U.S. community banking system. Why? They are using this crisis that they created to usher in a new Orwellian financial system controlled by their own central bank digital currency, or CBDC. How do they do it? Hello, I'm Crypto Casey, and in this video, we are going to explore the absolute tsunami of bank failures that is headed our way, and how unprecedented financial history is unfolding right before our very eyes. Let's hit it. Please check out our sponsors, CoinLedger, NordVPN, and Ledger. Start getting your crypto taxes sorted out with CoinLedger's cryptocurrency and NFT tax software that will save you time and help maximize your refund. Secure your data, privacy, and access to important financial and cryptocurrency accounts from hackers and trackers by using virtual private network services provided by NordVPN, which we could redeem for a special discount below. And please make sure you are taking complete control and ownership of all your digital assets and cryptocurrencies by using secure cold storage hardware wallets like Ledger devices. So make sure to scroll down and use links below to access the correct and official sites, as well as redeem any special offers they have for us, all while supporting the channel. Sweet. So how did the Fed create this crisis? And what are they trying to blame it on? Here's a tweet by Dan McArdle that summarizes it nicely. So, regulators force banks to hold tons of treasuries, banks load up during ZIRP, Fed prints $5 trillion. Oh my god, inflation. Jerome hikes at fastest pace ever. Bonds crash. Banks realize massive losses if depositors demand withdrawals. Everyone blames Bitcoin and crypto. LOL. But as banks are collapsing, Bitcoin is no longer being treated as a tech stock. It is a completely different use case now for people that have had the realization. And if you haven't, or if someone you know and care about hasn't had this realization, watch and share this video breaking it all down by clicking on the link above. And just to be crystal clear, it's not about trying to convince people of something. We all have our own beliefs, have our own unique experiences and perspectives on all aspects of life. So it's actually a matter of knowing and understanding something before everyone else, which at some point in the future, everyone else will know and understand it. And at that point, we're likely looking at a 100K Bitcoin and beyond. So by knowing and understanding how Bitcoin works and what problems it solves early, we will likely reap the benefits of its potential substantial increase over time. The government is weaponizing market chaos to try and kill Bitcoin and crypto by shutting down access to and from traditional financial systems like the banks. And in reality, yes, banking is a necessary evil for us to transact, unfortunately, for now, but they need us more than we need them. Because if we are able to shift to using Bitcoin or another blockchain-based, decentralized, transparent, and immutable cryptocurrency, we do not need to use banks. We can transact directly with each other, quickly, efficiently, and cheaply, without the need for third-party intermediaries like banks. So am I worried about the concerted effort by the US government to choke fiat to crypto on and off ramps? Not really, because there will always be entrepreneurs somewhere out there looking to fill and need and provide value to the world. So as crypto on and off ramps shut down, it just creates opportunities for someone else to fill the space. The US is clearly scrambling to maintain its power and status as the world's reserve currency, and it's willing to sacrifice anything and everything else to do it, including small banks, the taxpayers, and its society at large. What else are they willing to sacrifice? Sacrifice people's lives, including US citizens. They're likely willing to initiate World War III to retain its hegemonic supremacy because the dollar is absolutely wavering and getting worse. As the money printers have officially fired back up, Fed's new BTFP facility is stealth quantitative easing, injecting up to $2 trillion in liquidity, JP Morgan concludes. So inflation will continue to spiral out of control, and it is legalized theft, in that it degrades, devalues, and dilutes our US dollars that we trade our most precious limited resource for, time, as well as energy, which is a violation of our property rights. As we've been harping on here on the channel, our lives, liberty, and property are in jeopardy, and the markets reflect people's overall feelings and sentiment. So if we look at the bond market in particular, it clearly indicates that no one believes these bailouts are going to work. George Gammon brought up a great analogy in one of his recent videos I will share with you here to illustrate the fact that smart money in the bond market is preparing for a financial meltdown, while everyone else may think this is an isolated event. This tsunometer is a tsunami detection device, and this little wave here is Silvergate, Silicon Valley Bank, and Signature Bank's collapse, as well as Credit Suisse's near collapse. So you can see hardly noticeable on the surface of the water. So most people are shrugging it off. Now as the wave comes upon the tsunometer, danger is detected. And the tsunometer, in this analogy, is the bond market, and it signals to this surface buoy and satellite, smart money, that a disaster is imminent, which then warns the facilities on the shoreline. us. And most of us are either ignoring the signal, don't understand the signal, or hear the signal loud and clear. And if the bond market signals aren't compelling enough, check out this chart. This arrow is pointing out Silicon Valley Bank that went bust. And all these banks to the right of it are actually more risky and slightly worse off than Silicon Valley Bank. Over 34 more banks are at risk of failure. And all the way to the left here, we show what will likely become the only big banks to exist alongside the central bank or Federal Reserve once their centralization and consolidation plan for the US banking system is complete. JP Morgan, Bank of America, Citibank, and Wells Fargo. This is the impending tsunami the bond market is warning us about. Massive systemic bank failures, and not all of them will be bailed out. That's what U.S. Treasury Secretary Janet Yellen said today. The Fed will pick and choose which banks get bailed out. We are in the midst of an arms race, our generation's most important arms race, against the U.S. Central Bank, other big banks, and their bought and paid for government and regulators. So what is the best case scenario for crypto? I think this tweet by Ryan Selkis sums it up nicely. My rough prediction for the next 12 months. 1. More bank failures in the next couple of weeks. 2. Fed cuts. QE is back. 3. Bitcoin climbs, sustained moderate inflation. 4. Outside money or sound money gets Bitcoin to 100K. 5. Institutions buy faster than the feds can shut down. Game. This is an optimistic bet on the future, as Bitcoin is treated as a life raft and peaceful option. But the key is threading the needle so institutions can buy it and defend it alongside us. Best case scenario right now. Cool. So what's the worst case scenario for crypto? Like we've been discussing for years now at this point, it hasn't changed. If Binance, the largest crypto exchange, or if Tether, the largest stablecoin by market cap, goes bust, crypto will tumble significantly. It wouldn't die, but it would be bad. Definitely the worst case scenario. If US regulators and the government are successful in their attempt to sever connections between our traditional financial system and crypto won't die. Sure, it sucks that a lot of US money will be prevented from entering the space, but crypto will continue to exist. The US can't stop it. All the US would be doing is preventing itself from participating in this most important phase of the entire internet revolution, as well as the next largest incoming asset class in the world. Crypto is moving and will continue to move offshore, depriving the US from one of the most important innovations in human history, all in a futile effort to maintain the hegemony of its corrupt Ponzi scheme, the US dollar fiat currency, by committing one of the most heinous power grabs in human history, implementing a central bank digital currency that is programmed to do whatever they want, based on power and greed. None of what's happening and what will happen as banks continue to collapse around the world would have been possible in the truly decentralized, transparent, auditable, and over-collateralized crypto asset ecosystem. Crypto is the apex financial predator. It is the solution to all of the central points of failure, opacity, and blatant corruption in the current global financial system. That's why they're trying to make it a scapegoat for a crisis they likely planned and are executing, which you can check out why by clicking on the link above. In the midst of it all, Bitcoin and crypto has been decoupling from the stock market and behaving like a safe haven asset, along with gold as prices appreciate. So what should we do as crypto investors? Simple. Stay calm. Focus on what we can control. Commit to doing the best we can with what we've got. Keep working on increasing our income and cash flow, and stay disciplined. Also, diversifying our wealth is more crucial than ever. Check out treasury bills, stocks, bonds, real estate, gold, silver, Bitcoin, Ether, and also consider the unique, time-tested, uncorrelated asset class of fine art with Masterworks platform. Art is one of the oldest asset classes there are. In fact, Sotheby's is the oldest company on the New York Stock Exchange, nearly 275 years old. So people have been trading art for centuries, and typically only the ultra-wealthy have had access to fine art investments. Until now. Masterworks removes the barriers we would otherwise face if we tried to invest in art on our own, because the costs are extremely high for the average investor. So they take this very large asset class, which is roughly $1.7 trillion, and make it accessible to a wider range of investors with their platform that transforms physical art into share-based ownership. Here's how it works. Masterworks uses their expertise to select and buy art they believe to be investment-grade paintings, then they file it with the SEC. Similar to how a company goes public. And finally, they sell shares of the painting, which allows people like us to own fractions of pieces of fine art. So this is the first opportunity for anyone to invest in multi-million-dollar artworks, and Masterworks has become so popular that there is a waitlist to join. However, if you use the link below, we can skip the waitlist and start diversifying our investment portfolios into this unique asset class. So scroll down and check it out. Cool. So the question on everyone's mind now is, what is the Fed, the US Central Bank, going to decide about interest rates at its next FOMC or Federal Open Market Committee meeting next week on March 21st and 22nd. Well, surely since QE, or quantitative easing, has started, they won't hike rates further, right? Wrong. The ECB, or European Central Bank, has been doing both, printing money and increasing interest rates over the past 9 months. And just this week, the European Central Bank hikes rates despite market mayhem, pledges support if needed. They increased by 0.5%, 50 basis points. Insane. Is the Fed going to follow suit? Let me know what you think in the comments below. My random wild guess is that I truly don't know. There are likely 3 scenarios: a 0.5% hike, just like the ECB, a 0.25% hike, or no hike. If the Fed really planned this whole crisis to orchestrate the most heinous power grab of all time, they will hike 50 basis points, or a 0.25 basis point. Or if they really want to try and undo the mess they've created, they will not hike at all, or would decrease interest rates. Because as we've been discussing on the channel, they will only stop once they reach their 2% inflation target, or when something big breaks. Something big has broken, and they have fired up the money printers. So their 2% inflation target is likely out of the window. However, as we discussed in a recent video together, this may have all been planned to usher in their central bank digital currency. If that's the case, then they will hike and continue systematically destroying the US community banking system in order to centralize and consolidate power. By the way, this is all great for Bitcoin and crypto long term, but this is very, very bad for pretty much everything and everyone else. The current situation is disturbing and the future is uncertain. There is a massive financial crisis underway. Banks across the country are sitting on massive losses. Some will go insolvent, and some will not get bailed out. In the end, I'm hopeful that Bitcoin, crypto, and truly decentralized, transparent, and immutable financial systems will emerge like a phoenix from the ashes of this disaster. So now is the time to get curious about Bitcoin, to get knowledgeable about this new revolutionary technology, and to spread awareness about it with our friends and family. Awesome. So if you would like to learn more about how Bitcoin works and why its revolutionary technology can help us maintain power over some of our wealth, check out this video. If you would finally like to have that eureka moment about how cryptocurrency wallets, seed phrases, and private keys work, check out this video. And to skip the Masterworks waitlist, click on this link on the screen. Like and subscribe for more. Be safe out there.